Hi traders, what we're going to be looking at here is assessing direction and potential for trades, which obviously is an important question. Is this the right place to trade, and in which direction am I going to trade? So here we have a chart that's, and obviously we're looking at the right hand side here, but you see it's had a bit of a push down there from a level of support, and it's now retracing back. Now the question is this going to carry on an uptrend, or do we have resistance levels and support levels that may support trade in the ongoing downtrend that's been happening? So first port of call is to draw some Fibonacci levels in. For those of you who don't know what Fibonacci levels are, they are levels used by the big dog traders. There we have a cluster from that high there. So I'm not quite on the high there, but yeah, there seems to be a cluster with the 50 and the 61.8 there. And let's just see. That's the same level. Yeah, nothing there. But there we have a 38 clustering with the 50, which is also clustering with the earlier 61.8. So there's a triple cluster there. My Fibonacci levels just playing me up a bit there. So at that level there, we have a strong level of support, a strong level of resistance showing. So I'm going to take some interest in that level, especially since we've just turned up to it. Now it looks like there's been a technical reaction to that level already. So obviously it's a recognized level of resistance, which is quite close to previous support as well. Just checking that the levels I've used are actually highs. And then that is, so yes, we just to show that 61.8 clustering with the 38 and clustering with the 50% as well. Quite a strong resistance level there. We just mark that area in so that we can keep it, and we'll get rid of the fibs so that we can clear up the chart a little. There you go. So you can see that price has pulled back to that level and then dropped off a bit. Now on the hourly, you can clearly see a very if you know about trend flow analysis, then you've got a bit of we're in an uptrend there, and we have a little bit of divergence on the MACD, convergence on the RSI, but the stochastic is clearly in a position to downturn, and then we have this pause in price action, which is indicated by the small candle at the top there, which is associated with the resistance level, which has also acted as early support as well. And that's further back in time as well. You can see that nice little, very small rejection candle there, actually, a little doji. If I were to zoom in, I'll zoom in a bit, you'll see that's actually a kind of a shooting star type formation. For those who don't know about candlesticks, I speak about this further. You can go to my website at netresource.org.uk and look up some information psychology there. And there's also a course that I run, which is a one-time mentoring course. It's without limit of time, and just once you enroll, take you through stage learning and mentor you through to successful trading. Now you can clearly see a shooting star type candle at the point of resistance there. Now this is a counter trend trade, but you can clearly see that there's been a technical reaction there. And if you were to take that candle there, oops, frame me up a bit. One second. Trying to grab that. Sorry for that. Yeah, there you go. So you can see you clearly very quickly got a 1-to-1 there. So possibly a 2.5-to-1 there, even including the spread. It's not showing on the chart at the moment, but there's quite a small spread on Brent crude. So if you had worked off that resistance level there, which is indicated by the cluster, you could have actually used a candle potentially. It is a riskier trade using the candle. Some would use the previous high above that, which is just to the left there, or some people will use an arbitrary but consistent stop loss of around about 30 pips or so, depending on the currency pair that you're trading, of course, and the time frame that you're using, and then perhaps go for a 1-to-1 with the stop loss that they set themselves. But obviously, if you're looking to trade accurately and use price action for trading, you are looking to respect the candlestick psychology and resistance levels. And there is an argument that if it does go above that, then the trend is continuing up, and you're more likely to get to want to trade perhaps off the technical reaction from that resistance level, which was the triple Fibonacci cluster, because we're still in an uptrend there, and it's currently a counter trend trade, but you are working off the technicals. Not always advisable. It's a much riskier trade. It takes a fair bit of experience to be able to trade off the technicals for a counter trend move. But as you can see, quite often in the markets you will see a technical reaction to technical indicators within the market. So yeah, you have a clear uptrend. It's hitting clear a triple cluster of Fibonacci levels, which is at a logical level of the higher time frame retrace. So the question here is what you need to ask yourself is, is this a place to trade? And as I've said, that if you were to trade here, it would be a counter trend trade in relation to the initial trade direction, and it's risky. It could still potentially push up higher and show some more divergence. You may actually see some divergence come into the RSI as well, as price pushes up a little bit higher, which would then move up to a higher technical level most probably, before finally pulling back. But you can clearly see that there's been a technical reaction there at that level, and by technical reaction I mean that a lot of traders would have put orders in there, and then that reaction happens as those orders are triggered, and you can see the price is just shot down, and you can get quick trades off that if you want to sort of risk counter trend moves. And what I've been doing here as I'm talking is I'm drawing in the daily range, which I discuss further in courses that I run it's a higher probability range for the day is what I've drawn in there with those two blue lines. And as you see, it's moved up, not quite up to what I'd consider the higher range for the day, but there is potential for this now to downturn. It could move up a little bit higher, but if you had traded that candle, then you'd already be probably out of the trade anyway. Or what a lot of people do would take out 1-to-1, a partial profit, 2-to-1, take another partial profit, and then perhaps let the trade run in case it comes further down, and perhaps move in their stop loss to break even, so they don't actually lose any money. Some people will move their stop loss even in the direction of the trend to break even. It's not always advisable because quite often price will come back, retrace, stop you out at your entry level if you've moved your stop loss up. But there are strategies that actually promote that, and they are successful strategies. They have a high success rate. You can see the divergence here on the lower levels, lower time frames rather, and the immediate divergence. That's not really relevant. No stochastics and convergence and price action there and indicators. Not too much to say about that. But you can see now in the lower time frames that a little bit of a downtrend may be forming. That if it comes down below that candle there, you then be in the downtrend, and you could trade off the technicals within that downtrend then. So I'll be looking at this now further to see if a downtrend forms on the low time frame, with a view to that trade continuing, on the basis that we have that strong resistance level there, higher time frame. It's at a logical level of retracement on the higher time frames as well. So all these things are stacking up your trade probabilities in your favor, for actually relying on market creating a turning point here. So quite a high likelihood of it starting to turn into a downtrend. Could still, nothing is guaranteed in the market. Price could continue retracing before it pulls back again. But I am personally looking for a bit of a turn here. But that will, whether I trade that will depend on whether a trend is formed, and if the technicals support it at the time of trading. I'll just look at a few extra points here. Let me just have a quick browse on the chart. Not much to show there. I'll just chat as I'm looking through the chart. I'll just chat briefly. When you're trading, there's a lot of issues. If you're new to trading, or you may be an experienced trader, if you are, then you'll probably know most of what I'm talking about anyway. If you're new to trading, there's a lot of psychology that you have to overcome rather, and you have to allow yourself a certain time for acquiring technical knowledge. I'd say for some people, the term technical can be a bit off-putting. Trading is easy to learn. It's very simple to understand. The difficulty comes in implementing it, and a lot of that is around the emotions of risking your capital. Not many people, not everybody who comes in trading has a lot of capital. Some people may only have a few £100 they feel that they can risk, but you can trade with that, and you can trade successfully and build up your capital. I like people to perhaps see if they can save up £2,000 to put into account to start to learn to trade live. You don't need that much, but it's certainly it helps if you have a little bit of capital to allow more trades to be running consecutively, because you have to allow for margin requirements. But the beauty of trading is whether you're risking £40 or £4,000 on a trade, which would mean the difference between making £40 or £80 or £4,000 or £8,000 on a single trade. The process is the same. So once you've learned to trade with smaller amounts successfully, then there's nothing stopping you up in your game and actually earning a half reasonable living out of it. And even if you're working, you can trade around your working life as well. You can use any time frame for trading. The technicals remain the same. Price action analysis remains the same, whether you're trading a 1 minute chart, 2 minute, 5 minute, 10, 15, 30, hourly, 2 hourly, 4 hourly, 8 hourly, 6 hourly. The technicals remain the same, and you'll find that patterns are repeated across the time frame. And you don't get every trade right. It's as simple as that. So you can expect some losses whilst trading, but overall your gains will outweigh your losses, and you will be making money, providing you employ proper money management and proper trade management during the trades as well, which means assessing the trades and managing it as they're going along. And it doesn't matter what time frame you're trading. So if you're working, you can actually trade a 4 or 8 hourly chart, which means 8 hourly chart, you can come back every 8 hours to look at a chart. You may not have to do that every 8 hours. You may realize once you get a bit of technical knowledge that you don't have to come back for 3 candles or so, so you'd be checking in 16 hours time or 24 hours time to see how the technicals are setting up, and you'd be looking for a specific candlestick entry then, or you might be setting orders to a lot of people would have whatnot gave that technical reaction there. At that level are orders in the market that people have placed. Prices hit that, and it's kicked in as everybody's put their trades in. So actually I haven't said orders. Yeah, the price did pause, but the technical reaction would have been traders reacting to those technicals there. But you can see that type of drop off with orders as well. So anyway, I'll carry on looking at this chart. What we've looked at here very briefly is using how I utilize Fibonacci's and technicals to look at direction and possible trading scenarios. When you trade, you are looking to try and predict price movement with the technical information that you can assess from price action and other technical tools, using indicators which you can use in the leading way, using convergence and divergence with the MACD and the RSI. You can use stochastic for timing as well. It's oops, just banged my microphone there, sorry. So there is a lot of knowledge to accrue in trading. What you have to allow yourself is time to allow that knowledge to come to the forefront of your mind, so that a lot of people go into trading and they see the potential and they get excited about making lots and lots of money, and you can make a lot of money, but these type of people, they lose a lot of money as well because they haven't learned to be disciplined, and they don't know when to get into the market or where to get out. And if you don't know where you're getting out of the market, you really shouldn't be entering it. You use the technical information to try and assess that, as well as chart geometry and other information. If you're not aware of these things, you should consider doing a course or looking at more information on the internet to try and gain more knowledge. Trade with a demo account if you're not sure what you're doing. That'll give you confidence and experience, or show you that don't risk your own money basically. If you're not sure about what you're doing, open up a demo account and trade it for a while, seeing if you can make some money. It's not the same trade in the demo, and it's important. A lot of people can make money on a demo, and they go into live markets and with their own money, and they, after saving up for it, and they just lose money because they haven't learned to manage their emotions around trading. They haven't learned proper strategies around trading, and these things are important. And this is you have to treat it like a business. You have to allow yourself some time to acquire enough knowledge to be able to trade proficiently. And if you if you were to go into university or something, you'd spend quite a few £1,000s on learning a new trade or a new profession, and you could be studying for years, even with apprenticeships, before even beginning to be able to make money. Trading is something you can make money in quite quickly, and yes, you do have to risk some money, but then if you went to university or college, aren't you putting money at risk there? You have to pay for the course. £20,000 or more for university, isn't it? It's not a cheap venture. And if you spent £20,000 on learning to trade, you'd be probably making a lot of money now. So these are some things you need to consider on the psychology of approaching committing money to trading. You can start off trading on the budget. I discuss this further on my site. If you wanted to go and have a look, you're welcome. There's so much potential with trading for money making. As I say, once you've learned to trade successfully, doesn't matter whether you're trading £4 or £4,000. Once you're trading successfully, if you've got a bit of money to allow the margins required, or if you're trading equities to be able to buy the stocks, then you will become a successful trader with proper risk management, proper emotional management, learning the technicals and fundamentals if you want to get into the deeper aspects of trading, but which you may well do. But you can trade purely technically, as you've looked at some of the things I've talked about here. Expand on these on my site further. So I'll bid you farewell for now, and I will be putting more videos up in time. At the moment, this is my first video going up on YouTube for general information for people to show how you can start to assess the direction of the market using technical information. It won't come to you straight away if you start to learn, but if you take it a consistent approach to trading, you commit yourself both financially and personally towards studying, towards learning the trade, then you can pick things up quite quickly. It's a very simple. It looks quite imposing. Looking at charts and lines and things, you're thinking, well, what on earth is all that about? Once you start to break it down, which is important, not to get an overload of information, because then your mind just clouds, and you get too much information to process, because your mind can only process so much information at a time. And you can get paralysis in trading, where you're analyzing too much and you can't make a decision because your mind's just got too much information. Putting it all together is difficult. So it's important to do things in a staged and structured way. But once that knowledge is ingrained, you'll find that you'll be able to process it far more easily. You'll be looking at charts, looking at support and resistance levels, and you'll be recognizing where
markets are likely to turn, where the logical place to get into trends is, without putting too much risk on your capital. You'll be employing proper risk management, and you'll be making a shitload of money for yourself, which is what it's all about at the end of the day, which will make you happy. The knock-on effects on you and your personal life, having a bit of financial freedom, bit of emotional happiness in your independence and making your own money without some arsehole telling you a load of crap over nothing, which you probably all experienced at some point in your life, if you've worked, or if you haven't actually. So get out there, start learning demos. If you want a bit of guidance, I do run a course for that if you wanted to. But the important thing is get the basic information. Don't overtrade. Be sure of what you're committing yourself to. Know what your margin levels are, how much you need in your account, and how much you can float to or trade at a time. And trade consistently. Keep at it, and in time it will come to you, and you will be successful. It's an easy thing to learn trading. Just go out there and get it for yourselves. The opportunity is there. Go out and make yourself some money. Alright, you take care now.